Good evening. Thank you so much that you have found your quality time to be with us this evening. I am your host, Kelvin Chisanga. In tonight's discussion, we are basically just going to learn you through a number of key economic highlights, starting from last year, going through into this year, also projecting into part of the next year's view. I am basically joined tonight with somebody who's very, very keen with most of what happens around economic matters. And this is somebody you all know. Mr. Trevor Hambayi is one of the members that is coming from Economic Association of Zambia and is with us tonight just to discuss through economic matters. Mr. Hambayi, welcome and good evening.
Thank you very much. Good evening, Kelvin. How are you today?
I'm good. I'm good. We have never spoken this year on the television together. We also met last year when we were talking about symposium. I hope you have got a lot of things in stock for this year.
We must remain positive for the year 2025, but also the issue around us having to be able to address the challenges that the country is facing is paramount. And I think the symposium that you're mentioning is one of the issues that we're working on to try and be able to address the challenges that the country is facing around supporting domestic investment. But we remain positive for everything else that is coming through the year.
Oh, fantastic. Okay, so understanding that you are representing Economic Association of Zambia, and of course you have enveloped yourself with so much knowledge around issues of economics. I would love you to learn us through key highlights that could have been triggered from last year and up to this moment before we get into the focus of this year.
So, looking at the economic performance of the country for 2024, the fundamental issue that you will always come to appreciate is the fact that our GDP was estimated to be at 1.2%. which was a contraction of that GDP. At 1.2%, we are very nearing the area of recession. We must understand what has driven this factor. Firstly, is that in 2024, the key fundamental issue that we had was obviously the drought. This drought put us in a position where there was reduced production in the agricultural sector. Half the country was facing a drought, and we lost the harvest from there. The second one that came is that with the drought, we also had an issue around the fact that we had a power deficit. This power deficit increased from 8 hours to 21 hours. This contracted economic performance in the country. These were the domestic factors that were driving the issues around low growth in the economy. But there are also external factors which were pushing the cost of living. The first one is speaking to the issue around the fact that during the year, the price of crude oil in the international market was rising. It came to almost $90 per barrel. This was reflecting in the price of fuel that you do see in the country. Remember, prior to this, the fuel was around 16 kwacha per liter. We've gotten to a point where now it's 34 kwacha per liter. This is a very cardinal issue in terms of having to operate our economy. And then, of course, because of this power deficit, we go to a situation where the power utility company also now increased the cost of having to be able to provide us with this limited power of 3 hours. This has also been a very issue around driving an increase in the economy, in the cost of living in the economy. But fundamentally is the issue around the exchange rate. Zambia is an import-dependent country. We import more than 70% of the commodities that we use. And to do this, we are having to use a hard currency. To do this is that the exchange rate has been also, which is a kwacha depreciating, that value has been increasing. It has come as well from 18 kwacha, 28 kwacha where it is now, running into 29. This has increased the cost of living for ordinary Zambians. So if you're looking at 2024, paramount is that what you realize is the issue around how expensive the cost of living has become. And I think that is cardinal before we speak about the strategic position of macroeconomic indicators as to where they are. But I think those are the key highlights that I do see in 2024. Other than that, you might also want to be able to speak around the mining sector is that in 2024,
Sure.
we had a reduction around the productivity of copper.
Okay.
But in 2024 is that a couple of issues that we had were starting to be addressed. And while they're addressing this, there was a recovery in those areas in the mining sector.
Okay.
And I think that is a key issue to be able to speak about.
Okay, so now looking at all these factors, particularly on the sectorial performance in regards to maybe, say, mining, agriculture, tourism, and manufacturing, what would be the most prominent feature that we should be able to see in terms of numbers there? Are we talking of, doing relatively better from the previous year, or are we talking of doing better maybe coming into this year? What do you think 2024 was in terms of sectoral-based performances?
So in terms of sectorial performance from, in terms of the economy, firstly, if you're looking at agriculture, obviously it was affected by the drought. It was estimated that 50% of the production was lost because of the drought. Going into 2025, we have seen that there has been a marginally better rainfall pattern this year than we had last year. It hasn't been very consistent, but there has been more rain, and this might be speaking to a positive that we will get a better production in terms of the agriculture sector. Also, unfortunately, is that from our perspective as a country, we have not done sufficient to be able to deal with the issue around our power deficit.
Okay.
And the only area where we seem to be wanting to be able to find this solution is the fact that we have sufficient water to be able to do our hydropower generation. Again, I think it will improve. I don't think it will solve the problem for 2025. So I expect that we'll still go through 2025 while facing this challenge around the power generation. Because our main power hydro station, which is the Kariba, requires at least 3 years to be to come to full capacity in terms of rainfall. And this year is that it's not going to get to capacity. So in order to maintain its lifespan in terms of generation, they will need to be able to manage how long it is actually generating power, which might mean that we don't have power for 24 hours. That is a very big challenge that will be facing in 2025.
Okay.
On the agriculture side is positive. The mining sector is a very interesting one. Obviously, is that in 2024, we seem to have resolved the challenges in terms of the legal issues that we are running.
Yes, sure.
Between KCM and then we had Mopani. Those were resolved, and now they are supposed to be able to get back into productivity.
Now, maybe speaking on that, before you jump on to the others, does it mean that because of those resolutions that were made regarding legal issues, that's the reason why we are giving a 12% increment last year in terms of output from copper or the mining totality?
I don't think we had an increase in terms of output. I think in 2023, our productivity fell from 800 to 600,000 metric tons.
2024?
2024 is that they had a small increase,
Okay.
which was around 600,000.
Okay.
But that increase was insignificant to be able to change the metrics around the supply and demand of hard currency within the country.
Yeah, sure.
And that you continue to see in 2024, that we're facing a very big challenge around supply and demand.
Okay.
This is a very unfortunate position for us to have. Firstly, you must understand that in the last 4 or 5 years, the price of copper on the international market has been at its highest ever in the history of the country.
Sure.
So essentially, as a country that is copper dependent, we should be swimming in happiness because the price is good. This hasn't happened. What it is saying, and you must also remember that our productivity has also increased, is that if you're looking at, if you're looking at the time when we got to 2018, 2019, we were very well in the 800,000 metric tons. But that dropped, but it's been going back gradually to the 800,000. So essentially is that we have increased productivity, the price has been good, we should have been in a very strong financial position as a country. This hasn't happened. It is speaking to the fact that the resources that we're generating from the mining sector are not in this country.
Okay.
And that is a big challenge that we need to be able to address as a policy approach.
Okay.
And I think those are the key major factors in terms of our economy. The other areas that you do have, obviously, you've got areas around construction, wholesale and retail trade, the construction industry. So the key issue that I do see around all the other sectors is that it doesn't matter which sector of the economy you look at in this country, it is all driven by foreign direct investors. Is that there are multinationals that are driving each one of these sectors. And this is the challenge that we do have. Because this impact in terms of what it is doing is putting a lot of pressure on our exchange rate because they're externalizing the revenue they're generating. So any resources that we are able to bring into the country. Now, the issue that is of concern is the policy issue around what our foreign direct investors can externalize.
Okay, so perhaps we can also look at the policy stimulations and formulation itself. What do you think should be done better in terms of policy framework, regardless of the industry? Do you think we need to massage some better deals around the policy?
So, firstly, Kelvin, it is important for us as a country to understand where our strength is as a country. And secondly is that how do we exploit that strength to speak to the benefit of the ordinary Zambian, which is what our core issue should be, is that how do Zambians benefit from this? And our strength has been in the fact that as a country we are endowed with all these minerals, all these natural assets, that are what is driving the foreign direct investors to come into this country to invest in. Now, the first thing that you see recently, there was an increase, there was this issue around a tax rebate that they were giving to the ones that are exporting minerals. Is that my view is that all our minerals, all our raw materials, all our mukula must have a very high tariff if you want to export them out of this country. What that means is that if you put a high tariff on it, is that you need to process them locally. When you process them locally, because of the high tariff, you prefer to process them locally. When you process them locally, for you to be able to export, we'll cut this tariff by 90%.
Oh, fantastic. Now, that brings me even to the precious stones or gemstone sector. What do you think of the withdrawal of maybe 15% from the sector itself?
So again, this is exactly the same thing that I've mentioned, is that we should never be thinking about having to withdraw this tariff. These are our minerals. We want to get value for them. We must tax them. This everybody does who want to protect the interest of the country. So in essence is that I do not agree with this issue around having to be able to give this rebate, is that this is our strength, is raw materials. This is what we have. We are not going to get into a position where we'll tax the processed materials. We haven't gotten there. We are not going to get there in the next 10 years. Let's tax what we have. But secondly is that while we have worked on having to be able to take out this tariff for the export, we have ignored the fact that our local SMEs, that tax rate has been increased from 4% to 5%. And this is so unfortunate. If you're looking at an emerging economy anywhere in the world, is that 4 out of every 5 jobs that are created by an SME. The only way this can happen is that we need to be able to give the right support to these SMEs to be able to solve. And this is one of the two greatest challenges the country has. The first one is unemployment, is our greatest challenge. The second one is poverty. To be able to address this is that we need these SMEs to start to be able to create jobs. It deals with both jobs.
Okay, so now speaking of poverty, which we have seen that it's also keeping on increasing, what measures and models can we use to work out some elements around growth so that we can also create a demand for employment? What, in your own view, what policies can we put on the table?
So the first issue around policy, Kelvin, is that we've had a bit of a problem around our policy. If you look at our policy in terms of GDP growth, is that this has been a top-down approach, where we are looking at these large multinationals to come into the country, develop the economy grows, and we expect this to trickle down to the ordinary Zambian. It hasn't happened. The approach that is good for us is that we must start from the bottom going up. And that approach starts from the agriculture sector. We've got 3.7 million small-scale farmers that are in the agriculture sector. Is that if we started our approach towards having to be able to support them to grow to a point where they're out of poverty, it will start to be able to uplift the people of this country out of poverty, because the resources are starting from the bottom rather than from the top.
Okay, so you mentioned about tourism, hospitality and construction. My particular interest will be on the aspect to do with the construction, particularly on the issues of transfer regarding ZLI intervention around property lets. And we have understood that this year there's a let that has actually applied on the rentals. We're talking of rental income. Do you think this will activate a lot of activities to help maybe avoid depreciation of income at household level, or do you think this will activate the cost of doing business in this industry?
So let me address it as a general approach around the taxation.
Sure.
So in terms of the taxation, what you do find is that we have had a situation where the tax bands, the tax rates have been increasing in the last 4 or 5 years.
Okay.
Right? I think it has gone up by more than 41%
Okay.
in terms of increases in the taxes that we are actually paying. There's a problem in having to be able to do this, is that the income levels are not rising at the same rate as the tax, is the first one. The second one is that we seem to operate in a business environment that is run on debt. So all the small businesses have to do business and provide credit to large organizations that will pay you in 30 days, 60 days, and they're not being paid. Government owes 79 billion kwacha in unpaid arrears, okay, which is to suppliers and contractors. And they have not paid this over 4 years. So essentially is that, but ZR is still asking this small business to meet that tax obligation for money they have not received. So we've got a very big challenge around this. And what ends up happening is that for any business is that my tax obligation is secondary. First, I have to look at the issues around first having to be able to pay my wages to the staff.
Sure.
And for the project promoter to be able to put food on their table. And once they have done with those costs, then they look at the costs that are required to keep the business running. And when they have finished that issue around the business running, then they'll be look at what is my tax obligation. So it is not that they don't want to pay, it's that they have been put in a position where they are unable to pay.
So does it mean that maybe tax should be flexible, or in a flexible model, which should be able to be more friendly, like a small fraction from the business? Or how do you want, or how do you think we can work with taxation policy or structure?
The success of taxation would come from the process that we have created an environment where businesses are successful. All right? Right now, this business environment is very hostile, especially to a local enterprise. We have mentioned around the policies that are speaking to this. The issues around the tax incentives that the foreign entities are getting. The issues around the fact that turnover tax is on a monthly basis, whereas the corporate pay their tax on an annual basis, allows them to be able to reinvest the money that they have made into the business to generate more money, whereas an SME is unable to do this. So all these factors are speaking. Then there was, of course, the difference in the tax rate. An SME right now is going to be paying 66% more tax than a corporate entity. So these are negative aspects that are speaking to this. And for us to be compliant on the tax basis, that the revenue must be coming. The issues around this debt that the SMEs are owed and they are not paid must be resolved so that we are able to do this, because other than that debt issue that they have, an SME has got no access to bridge financing. That yes, I have done these sales, can I get money in between now? They are not able to get it. It will take you 6 months to try and get that facility. You're better off just trying to wait for the money that you're going to get. So essentially is that there's a very big challenge around us directly supporting our local enterprises that are 97% of the private sector to actually contribute to the growth of the economy.
Okay, so linking that perspective of SME access to finance and market itself, how do you look at Zambia's debt profile? I understand that there was a lot of stages that we are looking into, and maybe highlight where we are. What are the potential risks as well that are standing strongly into this issue?
So, positively, as a country, obviously we needed to be able to restructure our debt, because our debt had gotten to a point where we are unable it was unsustainable. We're not able to meet the repayment. I think that bill had come to almost $1.5 billion that we had needed to pay on an annual basis. The restructuring was reducing how much money we pay on an annual basis, which was what we needed to do. Now, we achieved this actually from a very long time ago, from November 2020, when we defaulted on our loan repayment, we stopped paying. So we created this fiscal space for us to have additional resources, okay, reduce the amount that we are paying. Where we are now is that the 3 years that it has taken to be able to restructure our debt is taken us 3 years. Technically now it's almost done. It's 90%, 95% done in terms of restructuring.
Sure.
There are still specific details around signatures that needs to be signed around the official documentation, but the agreements are in place. And now we start to pay. We'll be paying a slightly less amount. I think it's between $400 and $500 million that we're going to be paying on an annual basis. There's a bit of a challenge again there, okay? Firstly, is that when we achieved the restructuring in terms of the fiscal space we made, we did not put those resources into use for the economy to start to recover. Is that by the time we've gotten now, the economy should have generated sufficient income to be able to meet these repayments. That is the first issue. The second issue comes in the fact that in terms of our restructuring strategy, there don't seem to be any strategy that is speaking to repayment. We have reduced what we're paying. In 8 years, 10 years, come 2032, that amount will also still come due. We haven't put in place a structure that is telling us how we will pay that when it becomes due.
Maybe
that in 2032 now you start telling
because of that component of up to 2022 repayment period, what do you take of the payment that are taking place in electoral cycle? How do you look at them? Are they creating that confidence? Because obviously you're talking of the period, and I'm pretty sure that there could be payments that will be done late in electoral cycle. For example, next year in mid, maybe to make a payment, then you're going to election. Maybe 2021, you're going to election. How do you look at all those factors?
So, is that technically speaking, the election cycle should not affect this. And this is one of the things that I've always spoken around. Is that this debt restructuring has specifically stated what we're going to be paying over a specific period of time. Irrespective of whether we are in an election circle here, we need to be able to meet that obligation. There's always an excuse every time a new government comes into office that is going to tell you, no, this can't be done because the previous government did this, we want to restructure, we want to do this. Is that this should not be the way we approach our economic situation. I have mentioned before that the country needs to consider a situation where we create an economic constitution. Which economic constitution would also define what economic trajectory the country is going to go into. Any political party that comes into office must follow this trajectory, and we have got accountability on what we can measure them, because we have said this is what you need to do. That in every year you need to build 20 schools, you need to do 1,000 kilometers of road, you need to do 2 hospitals, and this is in our economic trajectory because we know what we want to achieve by the year 2050. So this would then be able to give accountability on which we can measure them. The current one that we have is that everybody comes and they throw us every manifesto, which does not actually speak to the interest of us as Zambians, but to the interest of a political party.
Okay, so now jumping to the same aspect of money issues and financial resources, we understand quite very well that Zambia has been facing a challenge of small notes, and especially looking at how the patterns paired last year. What do you make of this situation?
So firstly is that a change of currency in any country, in any government, is an ongoing process. They do it from time to time. You just must understand what are the fundamentals that are driving this. The first one that could be speaking to this is an issue where the central bank thinks that there is currency risk in terms of counterfeit, that the security features that they have there are not good enough and they needed to be able to change. That is the first consideration. The second one is an issue of inflation. So what you do also see right now is that the fact that they have included a 200 kwacha note and a 500 kwacha note is speaking to the fact that there has been growing inflation within the country. We want to be able to make this your transactions easier to be able to be had. So you don't have to count you carry a whole lot of money for you to make this payment because the currency that is required has increased because of inflation. Is that those are the two fundamental issues that you'll be looking at. There's a third one that you might be thinking, is that recently we have continued to see that central bank has put in place measures that are speaking to try and contain inflation, but the inflation has continued to grow. And they might be thinking that there might be resources or cash outside the financial sector that is driving this inflation. To be able to rein in those resources, they need to change the currency.
Okay, maybe just as a peculiar interest there, do you think inflation is being driven by these factors? And also, do you think we can combat inflation by raising the monetary policy rate?
So, firstly, I don't think these factors are driving the inflation. Our inflation is basically being driven majorly by the exchange rate. Is that there's a greater demand on the exchange rate, and when that kwacha depreciates against the exchange rate, everything goes up. That is the cardinal issue that we need to address. And to be able to address this is that firstly we need to put a hold on the hard currency, externalization of hard currency. That starts to be able to hold this, okay? And I would think that one of the measures that we need to take is that a number of measures have been put in place to try and contain this. It hasn't worked. We have tried to be able to release money from the reserves. We have tried to increase the monetary policy rate. We have tried the statutory reserves. It hasn't worked. Even the export monitoring framework has also not worked. Is that the only clear one that they think they still have in terms of an option to try and hold this is exchange control.
Okay.
Is that we must put exchange control, because right now the ones that are externalizing the funds are foreign multinationals. The ones that are paying the price for the increase in pricing goods and services are ordinary Zambians.
Don't you think maybe production is one element which is lacking into all these aspects, and also maybe the aspect to do with the what we have done to our economic structure, or do we need to drive some bit of policy that should be able to help us with the industrialization process so that we can combat this? What do you think about production in this case?
So you're absolutely right, Kelvin, is that in terms of having to deal with this challenge, production is the long-term solution. All these measures that we are putting in place are short-term. So we needed to be able to drive production for the GDP to grow, okay, to the extent where there is more, we've got a positive trade balance. We've got more exports than imports. Then the situation starts to change. Now, the policies that we've been putting in place structurally, all these issues around having to